Okay, so can everybody see the desktop now?
Yes.
Okay, let's start with the elements of the financial statement. Just want to mute everybody again. Okay, let's start with the elements of financial statements. Can everybody mute their mic, please? Okay, that's it. Okay. Okay, there's 5 elements to a financial statement. They are assets, they are expenses, they are liabilities, they are equity, and they are income.
Is that everyone here?
Yes.
Can you just please?
Yes, I can hear you.
Yeah, just go into presentation mode because it's a bit small on the screen. Students can't see.
So where do I have the presentation mode?
Just click F5.
Okay. Not working.
Okay, then just like you would normally do a slideshow for PowerPoint.
Okay, there's it. Is that better,
Okay,
Evan?
perfect. Perfect.
Okay, let's start again. Thank you, everyone. Okay, there are 5 elements of a financial statement. So basically, they are assets, they are expenses, they are liabilities, and they are equity and income. So it's very important to be able to understand the definition of these, to be able to classify them into the correct categories. Okay, so let's look at the definition of an asset. Okay, an asset is a resource controlled by the entity as a result of a past event of which future economic benefits will flow to the entity. So with this, if we want to classify something as an asset, it must meet all the criteria. So let's look at an example. So you have a car or a vehicle. Okay, so the definition is the vehicle, you purchase the vehicle, let's see if that applies to the definition or meets the recognition criteria of an asset. It is a resource. Yes, car is a resource. It is controlled by the entity. You can sell it, you can modify it, you can break it, you can kick it. So it is controlled by the entity as a result of a past event. Okay, so the past event is you purchased it, you inherited it, you possibly stole it, anything. Okay, of which future economic benefits will flow. This vehicle or this truck can do deliveries. If it can do deliveries and bring in money for your business, it means that it will meet the definition criteria of future economic benefits will flow to the entity. If for example, you purchase a vehicle and you purchase this vehicle and it's standing in your garage or standing in the driveway, it's a resource controlled by the entity. But if you just bought it to look at it because you have a fetish with blue trucks, then it won't meet the definition criteria of an asset. Okay? Because it won't bring future economic benefits, won't bring money into the business. Okay, let's continue. Okay, so some examples of assets would be client control. And for those people that did accounting at high school back in the day, okay, there's some different names attached to those. So students are always getting confused with the different names. So client control is more the legal term. The other accounting people call it debtors. Account receivables, trade receivables. The old days they called it debtors, or the school kids will call it debtors. Okay, so basically this is money which is owed to a business. Okay, this could also be classified as an asset because it obviously meets the definition of the asset. Okay, let's move on to equipment. I just want to mute, see if I can mute everybody quickly. Shows what it is. Just give me a second quickly. Okay, all is muted. Okay. Okay, let's move to equipment. Okay, equipment is classified as an asset because it meets the definition criteria. Okay, same like a car, equipment is something that you can purchase to make money from. It's a resource, it's controlled by the entity, it's future economic benefits will flow from to the business. Okay, equipment is classified as an asset, and assets normally increase on the debit side and they decrease on the credit side. In the next slide, I'll take you through that. So I'm just giving you examples now, and I'm giving it to because most people, most students prefer visual picture. So I put some visual pictures in as well. Cash. Okay, cash is a current asset, also a legal tender. Now, in your curriculum or in your study guide, cash is often synonymous with cash. Bank and cash is always the same. So petty cash also falls into this definition. Don't always think of cash as hard cash. It's also EFT transactions. Cash also increases on the debit side and they decrease on the credit side. Vehicles are also classified as an asset because it meets the definition of an asset. Vehicles are non-current assets because it doesn't get realized in 12 months. Okay, same here, okay, when purchased, the vehicle is increased on the debit side, and when it's sold, it decreases on the credit side. Inventory, okay? Inventory is something that we know of as stock. Okay, it's a non-current asset and it's used in a business to sell and make a profit. So in a grocery store, you have baked beans or cheese or anything. Those are stock items and you will be able to resell it. Okay, once again, stock or inventory is an asset and it will increase on the debit side and decrease on the credit side. Furniture. Okay, furniture is also regarded as an asset in the business because it meets the recognition criteria of an asset. Once again, it will increase on the debit side and decrease on the credit side. So our next element is an income. Now, income is increases in economic activities. And most items would be like fees, sales, rent received, royalties received, dividends received. Okay. Expenses. Okay. Rent is classified as an expense. Rent is not a liability. I know that many students struggle with the concept of rent being an expense. Now, expenses are decreases in economic activities, okay? And expenses are fuel, water, electricity, and depreciation, okay? Liabilities. Liabilities, the definition of a liability is a present obligation arising from a past event of which there is an outflow of economic benefits would flow. So an example of this would be you purchase a vehicle by Ford, okay? There is a present obligation to pay for that vehicle. And arising from the past event is something that you purchased. The purchase was the past event. The present obligation is I need to pay my installments every month over 36 months. And it normally results in an outflow of economic benefits, right? So an outflow of economic benefits in this context would be every month payments will go out of my business account. Okay, liabilities are divided into current and non-current liabilities. So your non-current liabilities is your mortgage loans, your long-term loans, and your current liabilities would be your creditors or your tax returns or your tax liabilities. So those type of stuff. Equity. Now, equity is the remaining interest in the assets of the entity after deducting all the liabilities. So basically, equity is your net worth as an owner, right? So if I take my assets in my business, it's worth 100,000, and my liabilities is 20,000. I am then worth, or my business is worth 80,000 rand. Okay. So let's continue. Just want to open the next one. Okay, so this is a basic accounting equation, how it works. Okay, when you go into the exam, always make sure that you, whatever you do, when you start to work out the examples, when you study, you have this type of equation. You can actually just print it and laminate it. In the circumstances, I don't think we'll be able to laminate now, but you take this and you work with this type of format at all times. Okay, so if we look at the basic accounting equation, the assets part. Okay, so on the debit side, assets will always increase, and on the credit side, assets will always decrease. And some types of assets is land, buildings, vehicles, equipment, inventory, accounts receivable, client control, buildings, bank cash. So when we acquire assets, or we acquire any of these things, money or cash, or it will increase. Therefore, we always say we debit our assets when it increases. When we sell our buildings, when we sell our vehicles, when we sell our equipment, when we pay money out of our bank account, if you see here under credit, here's a minus, which means to say it decreases my asset account. So on the credit side, when we're saying we sell something or we paid money out, we say we credit my asset. Okay? Let's move over here to the equity. Now you must notice that here is a reverse sign. So if you notice here was a plus under my assets. Okay? And here's a minus here. Okay? Under my owner's equity, here's a minus, so it takes the reverse effect. I ask you to please not make this mistake. I ask you to please not put your minuses and your pluses on the wrong side if you're going to use this table, because then you're going to debit and credit totally wrong, and you're going to understand everything wrong. So this is the whole key to understanding accounting. So on my debit side, I'm going to decrease my equity. On my credit side, I'm going to increase my equity. And here you can see income, fees, earnings, rental, dividends, royalties, sales, services rendered. those will all increase my equity account. If you look at my, on this side is obviously my expenses. Okay, so on my expense side, okay, I'm going to decrease my expenses. So I'm not going to decrease my expenses, sorry, I'm going to decrease my equity with expenses. So all my expenses would be things like water, electricity, credit losses, depreciation, rental expenses, and fuel. Okay, let's move over to this side. To the liabilities. Okay, on my liabilities, once again, it's the same like my equity. So I'm going to debit my liabilities here on this side. It will decrease my liabilities. On this side, when I on my credit side, I'm going to increase my liabilities. So basically what it means is when I increase my liabilities, it basically means that when I buy something, when I go to Ford and I say to Ford, you know what, give me another vehicle, a Ranger 2020 model, okay, it's going to increase my liabilities, it's going to increase my headaches. So anyway, I'm going to increase my liabilities. And at the end of the month, when I pay the vehicle, the installments, remember, it is a present obligation, right? So I have to pay these obligations. So if the repayment is 3,000 Rand over 20 months or 30 months or whatever, I'm going to decrease it on the side. So let me just put a more practical example using this accounting equation. So my grandfather gave me 50,000 Rand, and the 50,000 Rand is now in my bank account. Okay? So my grandfather, he died and I inherited the 50,000, and I decided I want to do business. I want to make cakes, nice big fancy cakes. You know, we've all got this passion right now for cake baking. So I'm going to bake cakes, chocolate cakes, and all the fancy stuff. So first thing that I do is you need to remember or see the whole picture. When my grandfather gave me the money, obviously it went into my personal bank account, okay? So I need to put that money now into my business bank account. So what I'm going to do is that 50,000 Rand is going to enter here, right? So it's going to increase my assets with 50,000 Rand, and it's going to increase my capital with 50,000. Okay, so it's going to be something like this. Wait, so I've got my 50,000 Rand, and I need an oven, so I want to buy me a big fancy snake oven. And I go to Tafel, their furnishers, and I take out the 10,000 Rand, and I purchase this oven, okay? So my oven is 10,000 Rand, so it's gonna lay here. Just want to show you, because the money, the 10,000 Rand, I now drew out of my bank account. So under my assets, I'm going to decrease my asset with 10,000 Rand. But I'm also going to increase my asset with 10,000 Rand, because an oven is actually an asset. Okay?
Hello?
Yes.
Oh, can you
Hello?
hear me?
Yes.
I'm just checking my voice if you can hear me.
Who am I speaking to?
Nishin. You're speaking to Nishin.
Okay. Just mute.
Okay.
Will you please mute your mic?
Okay.
Okay.
Shh.
Okay. So Okay, so let's continue. So now I bought this oven and I need a dough mixer as well. So I decided to go to Games and I buy this dough mixer or the cake mixer, and this cake mixer is 2,000 Rand. So basically, the 2,000 Rand, I'm not prepared to pay cash out of my pocket anymore. Now I am going to pay, I want to buy it on my game account. So what actually happens now is my liability is going to increase. Okay? So it's kind of like going to lay here the 2,000 Rand because you can see my liabilities here is increasing and it's going to lay here as well under my asset because now I've acquired a dough maker. So now all my assets, I had a 50K, I have a machine of 10,000 Rand or an oven of 10,000 Rand and I have a dough mixer of 2,000 Rand. But my liabilities also need to increase in this thing. So somebody phones me, Mrs. Jones phones me, and Mrs. Jones says to me, hi, can you give me 1,200 Rand worth of cake for my daughter's confirmation? I say, okay, sure. She pays me cash. Okay. So now that cash money is actually going to layer. Okay. That's where my cash money, because it's an asset and it's under my bank. Okay. But my sales is also going to increase now. So I made 1,200 Rand worth of sales. Okay. So the morning of the confirmation, Mrs. Jones comes back to me and she says to me, can you please make me another cake because we're a bit short and extra people is coming. Do you have an extra 500 Rand worth of cake? I say, okay, no problem, I'll make it. And I give her a cake, but she says to me, you know what? I'm running short on money. I pay you at the end of the month. I say to her, no problem. So, because she is now a debtor of me, right? I'm going to record it under my assets account, under my client control or my accounts receivable, because she must give me my money at the end of the month. Okay? So my asset account is increasing because my client control or my debtors, like some people know it, or my accounts receivable, trade receivable is increasing. But at the same time, I have made a sale of 500 and I need to reflect it here in my owner's equity and will be in an account called sales. This is just to show you where it's going to lie in the bigger picture. So 2 days later, Mrs. Jones says to me, you know what, Aziza, here's a 200 Rand. I've got a 200 Rand for you. I say, okay, thank you very much. So that 200 Rand, I'm going to put it under my assets. Why am I increasing my assets with a 200 Rand right now? Because my bank account is increasing by 200 Rand. So there's an inflow of money now, okay? The 200 Rand that Mrs. Jones gave me. But I also need to decrease Mrs. Jones' account. I'm going to decrease Mrs. Jones' account because she now owes me much less money. If you look at the effect of it, okay, I just want to show you this one. Let's just highlight that one, Mrs. Jones' account. So, okay, so let's just call this Mrs. Bank. Okay. Okay. So let's just call this Jones. Okay. So the bank account we said is a debit on your okay, and a credit on the side. Okay. So basically, Mrs. Jones paid me 200 rand. I'm going to put it in here. But Mrs. Jones' client account, okay, I'm going to reduce her 200 rand. Let's just start with the 500 rand actually. So when Mrs. Jones made the sale, she then receivable. Okay. So Mrs. Jones, when she came in, she then gave me the 500 rand. I raised my data. Okay. And then I recorded it under my sales, 500 rand. Okay. So now Mrs. Jones comes in and she pays me the 200 rand. So clearly here in Mrs. Jones' client's account, you can now see that Mrs. Jones owes me 300 rand. Okay, let's just put this 200 there. So now we can see that clearly Mrs. Jones owes me a 300 rand. I hope everybody can see this logic. Okay, so this is Mrs. Jones' account, the client debtor account. Okay, and this is my bank account. So in my bank account, I would have something like here called Mrs. Jones. And so when I look into my bank account at the beginning of the month or at the end of the month or whenever I feel like it, I will see that I got a 200 rand from Mrs. Jones. I've got a 300 rand from Mrs. Thompson. I've got another 500 rand from Jackpot or whoever gave me money. Okay. So basically, this is the idea behind the basic accounting equation. If I look at the example that I bought the vehicle, okay? I bought the dough mixer. So I bought this dough mixer, and this dough mixer was 2,000 rand. So let's just draw two T accounts here. Okay, so I said the one was my equipment. So I bought some equipment, and I also bought it from Game. So when I bought the equipment, I said that I raised my liabilities with 2,000 rand from Game, and I also raised my equipment. So I have now more equipment, okay? And remember that assets increase on the debit side and they decrease on the credit side. Okay. Okay. So my assets increase on the debit side and my liabilities increase on the credit side. Remember, for every debit, you must have a corresponding credit to get it to balance. Okay, so I have my 2,000 rand there. That was, let's just put a date here on the 1st of the 6th, or the 5th. So on the 1st of the 5th, I sort of then bought my dough mixer. So after Mrs. Jones paid me, I could go and pay Game now. So I paid Game 600 rand. Okay, So obviously, two things will happen now. My liabilities will decrease, right? And my bank account will decrease. But that's fine because I have a debit and I have a credit, or credit and a debit. As long as I have a debit and a credit. So now I have my 600 Rand. So you can actually see from this that my balance with gain is now 1,400 Rand. For those that always confused with carried down and brought down, carried down is before you close it, before the end of the month. Brought down is the first of the new month. Okay. So now I owe gain 1,400 Rand. I hope you can all see the effect of this transaction. Okay, in my bank account, okay, now this bank account is out of balance because we took hypothetical examples. Okay, in a normal account, we would have obviously had sales first. But you can see here this account is out of balance, meaning I've got less money in the account than what I gave out. Okay, so if I were to close off this account, I would normally take the highest value. So now you can see I'm basically in an overdraft type of thing. So basically, this is just the gist of how the accounting equation works and how for every debit, there must be a corresponding credit. So just to recap again, let's just recap the whole basic accounting equation. I said that assets increase on the debit side and the decrease on the credit side. Today we talk about assets. Tomorrow we're not going to talk about assets. Tomorrow we need to define what type of asset account it is. So we're going to say debit land. But the first step in dealing with this whole accounting thing is rather first work it systematically. So first say my asset, and then you ask yourself what type of asset is it. So my asset is going to increase on the debit side and decrease on the credit side. Remember, for every debit, there must be a credit. Remember, when we come to our equity side, it takes a reverse, the minus and the plus. If it's not reversed, you will get your debits and your credits all mixed up. Okay? So just remember, it's a plus, minus, and when it comes to equity, it is minus. Okay? Because my equity is decreasing on this side, and on this side, I'm increasing my equity. Okay? So everything, expenses would be fuel, electricity, credit losses, depreciation, rental expenses, and fuel. Capital will be under income. I mean, because of income is not, capital is not income, it is equity. It increases your equity. So you have income, you have fees earned, you have dividends, dividend income received, royalties. Everybody would know what royalties are. Okay, if you write books, and so you'll get your money in the form of royalties. Sales and services rendered. Services rendered is obviously only for service organizations. Okay, liabilities, they decrease on the debit side and they increase on the credit side. Okay, so they would, on the credit side, it would be all your trade payables that you made, okay, all your debt incurred, okay, and on your debt side, it's all your trade payables that you have paid, all your obligations paid. So basically, this is the gist of it. I would suggest you use this as a framework going forward, okay, and then whenever you're doing your accounting, you can exactly see and to understand it. Okay, let's move on. I want you to go to your book, your tutorial 101. Okay, so let's look at tutorial 101. Where is it? Your study guide. What is your study guide? And on page 18, let's look at the learning activity 2.1. Okay, I'll just give you 2 minutes to go to page 18. Can I ask everybody to put their student numbers in the chat, please? Can I ask everybody to put their student numbers in the chat? Can I ask anybody who has questions to post it in the chat so that I can see where you are and we can deal with it. I can send you a reply to my Unisa or I can answer you. Okay, so hopefully everybody has entered the student number in the chat and hopefully everybody is on page 18. Okay, let's look at page 18 and look at our first transactions. Paddy Servicing opened the doors on 1 January 2017. The following transactions took place during the first month of business. So, day 1, the owner makes a capital contribution of 20,000 Rand in the form of a check. Now, these questions will guide you because I know that students get often confused with the accounts and which accounts to use. So, in most times there will be a bank or otherwise a liability. But, and the other account is something that the question will tell you. So in this case, we say the owner makes a capital contribution. So because they said capital contribution, we would then want to put it in our capital account, okay, in the form of a check. Now, if you've got your accounting equation open there, you will know that the 20,000 goes into my bank account because my assets increase on the debit side and money is assets. Okay, so let's just put it into a summary here. So I'm going to say I'm going to debit my bank with 20,000. And then I'm going to say that I'm going to credit my capital account for 20,000. Just a broad summary. So if you're looking at your table, you will see that on my equity side, my credit side of my equity, capital, we will credit. And on my debit side of my assets, I'm going to increase it because the money is coming into my bank account. So what I'm going to do is, I'm going to debit, because I said now we're going to debit my bank, and this is something that I would recommend people to do before they do a ledger or any account. So a key account is just basically a shorter version, smaller version of your ledger. So let's just do one example, and we're going to put the 20,000 in my bank account because that's what we said. I'm going to open an account for capital. So let's enter a capital account. Remember, here is a plus sign. So I'm increasing my capital, and here I'm increasing my bank account. Now, to me, I find that when I do ledgers, it is much more simple to work from right to left. For the simple reason, it becomes very overwhelming if you start with a date first. I don't know why. So I'm going to put my 20,000. So in order to cross-reference the type of things, I'm going to switch these two accounts around. So I'm going to put something like capital here, and here I'm going to put bank. Can you see I'm putting the opposite of what it was? Okay. So basically, and then I'll put the date. So let's just put here 1st of the 1st, and let's just put here the 1st of the 1st for now. Okay. So can you see it becomes easier when I look into my bank account? I can see that capital, 20,000 Rand came in via capital. And that's why you can see at the end of the month where all your money is. Let's do the next one, number 4, day 4. Received 1,000 Rand in cash for services rendered. Once again, the question is giving me a clue. Cash for
Cash.
services, for
Service
services
that you
rendered.
rendered. Yes.
Okay, so now I've got my 2 accounts already. One is cash, which is bank, and the other one is services rendered. So let me just make a summary here. And so I'm going to say, let's debit my bank with 1,000, is it 1,000 Rand? Okay, and let's credit services rendered with 1,000 bucks. Okay, so now I can put it into my account. So I have a bank account already. We're not going to open another bank account and another bank account. We have one bank account, okay? But I don't have an account for services rendered. So I'm going to open one here called services rendered. Actually working in the wrong spreadsheet. Let's just here, 2.1. Okay. So I'm going to debit my bank. Once again, we're writing from right to left. We're all Muslim nowadays. We're Muslim, we cover from right to left. We're all Muslim now. Okay? So I'm going to debit my bank with 1,000 Rand because the money came in because the person gave me the cash money or they put it into my bank account. So I'm going to enter it in it because remember on this side the plus asset increase here, expenditure. But I also need to record it under services rendered. Okay? I'm going to switch the 2 accounts, bank and services rendered. So here I'm going to write bank. Right. And here I'm going to write services rendered. Okay? And after we put our referencing in, because it becomes very overwhelming, and then we put our date in, and then we put our date in. Later on, we will put in, later on in this column, we will start putting in which journal, but we haven't got there yet. So now you can see, in my bank account, I've got 20,000 from capital and 1,000 Rand from services rendered. Okay. Now, number 9, I purchased equipment per check for 2,400 Rand. Okay, so I purchased equipment, so I'm going to debit my equipment account, my asset account, which is equipment, and it was 2,400, and then I'm going to credit my bank account. I am crediting my bank account. If you're looking at the table that I gave you earlier, my bank account gets credited here because money is going out. There's a minus sign here. My bank account is getting less. Okay.
Check 2,400 is.
Okay, so now I'm going to put it in again from right to left. Put it into my bank account.
Sorry,
And don't
Aziza.
open. Yes.
So I think some people's mics are on because you can hear them talking. If you maybe can ask them to switch it off, please.
Okay. Ladies and gentlemen, can you switch the mic off, please? Can you just turn your mics off? And please don't forget to put your student number in the chat group. The mics are still on. Can you please all turn your mics off? Okay. Students, can we turn the mics off, please? John, is there any way I can turn it off here for them? John? Okay, let's continue, and please turn your mics off because it's causing a lot of static on our side. Okay, so let's look at our equipment account. So we're going to debit our bank. Sorry, no, we're going to credit our bank, and we're going to start writing it in the far right-hand corner. Right? Because we don't have an equipment account, and to open an equipment account. Okay? So my equipment account, I'm going to debit because that's where we agreed assets increased on the debit side. Okay? And because we paid cash for this equipment, we're going to credit our bank account because our bank account is getting less. Okay, so now we need to, put it into our references. Let's just put it in our references. We said we switch the two accounts. Let's put equipment. We're going to switch it around.
Excuse me, Miss Aziza.
Yes.
Some people are really being rude. There's a gentleman whose video we are seeing and there's children in the background singing. There. I'm not sure if it's a class now or we are.
Okay, let me just...
His video is on. His mic is on. They are singing.
Let me just...
Don't leave. Please.
I've muted them. Mute. Okay, I think I've muted all now. I don't know about the pictures in the background. Okay, can we continue? The sound's better. Give me 2 minutes. Okay, let's continue because the sound's a bit better now. Okay, the 2,400, we will debit equipment. We're going to switch the two accounts, and under bank, we're going to put equipment, and under equipment, we will put bank. So now, at the end of the month, I can see what my bank account looks like. So I can see that I bought 2,400 Rand worth of equipment, but I have 21,000 Rand in my bank account. I can see that services rendered was through cash money, and I can see that equipment was purchased for 2,400 Rand. And then we put our date, which is the 9th of the 1st. Okay. Okay, and the 9th of May. I want to try to do it like this from right to left. Because when you start here, by the time you get here, you are so confused already. So try to first do the summary like I do it here. Once you got the summary of the transactions, you then put it into play. And then you'll find it's much easier. Okay, let's move on to number 11. Paid wages per check, per cash check, per 500 Rand. Now, remember when the university talks about per cash check or checks and stuff, it's normally cash money, okay? So it's normally bank. So we paid wages, so I'm going to debit, okay, I'm going to credit my bank account because I paid the wages. Was it 500 Rand? Okay. So I'm going to credit my bank account with 500 Rand and I'm going to debit my wage account. Let me just see. Okay. I've closed that other one. So I'm going to debit my wage account, and remember wages I showed you was under equity and it is an expense. So therefore we debit our expenses and wages is an expense, okay, because it decreases my equity and it's 500 Rand. So I do have a bank account, but I don't have a wage account. So let's just open a wage account. Okay, so Now we're going to do the normal story. We're going to switch the two around so that we can cross-reference it easier. Or let's just first put the 500 Rand in. So I'm going to debit my wages, my wage account with 500, and I'm going to credit my bank account with 500 Rand. Okay, let's switch the two, and let's switch the two, and I'm going to make the reference wages that side, and here I'm going to make it bank. Next, we put our date in, and wages was paid out the 11th of January. Of January and 11th of January. So now I can see my bank account, 2,400 Rand went out on equipment and 500 Rand went out on wages, and 21,000 Rand is positive money that came in. Let's look at the next one. Received 500 Rand cash for services rendered. Once again, we make a summary of it. It's just much easier, and our summary is obviously based on the table that I gave you before. Okay, so I received 1,500 Rand for services rendered. So I'm going to debit my bank. Why? Because bank is an asset. Why? Assets increase on the debit side. Okay. I am also going to credit my owner's equity account, but we're big people now, so we don't talk about owner's equity accounts anymore. We talk about the actual account is called services rendered. Okay, so 1,500. Okay, so I'm going to debit my bank account. We remember we start at the right hand side, 1,500 Rand, and services rendered, 1,500. Okay, so we didn't have to now make more accounts open. We've already got all the accounts open so thus far. Right, so we're going to swap the two around to get our referencing correct. So services rendered. Okay, and here we're going to swap it around again, bank. So I can now see I am making all my sales cash. Will be coming for credit. What number was that? Number 17. So that was the 17th of January, and I put my date in. I am not used to doing accounting on a computer. This is new to me. So now I can see that I made 2,500 Rand from services rendered and my 20,000 in my bank account. Let's move on to day 23. I purchased stationery per check for 200 Rand. Stationery is an expense, okay? If I purchase something, I am reducing my bank account. Therefore, on my credit side of my asset, we're gonna credit our asset because we are reducing my bank account with 200 Rand. Okay, I'm going to credit my bank with 200, and I'm going to debit my purchases or stationery with 200. So now I need to open an account for stationery. Okay, so I'm going to swap these two once again around. It's pretty simple if you just work with a strategy. So let's put the 200 Rand in here because I said we're going to credit our bank, and I said that we're debiting our stationery account. So let's swap the two around to get our referencing correct. So let's put in your stationery. Okay, and let's put in your bank. Let's put it in a read. Okay. date in, and our date is the 23rd January, and that is the 23rd of January. Okay, so the next one, okay, there's still 2 to go, and then I can show you how you close the accounts off, because I know that many students, they do struggle with closing the accounts off. Okay, so received 800 Rand for services rendered. Okay, so once again, when we render services, we know that when the question says received cash, it will immediately be debit bank. If they say paid cash, you always go credit bank. That's the easiest leg of the transaction. And I find that it's much easier to start with that leg of the transaction. That's why you've noticed I started sometimes with credit, because it's so much easier with the bank leg of the transaction. And then you sort of can figure out the other transaction. So if I say purchase 800 Rand, received 800 Rand for services rendered, I'm going to go debit, bank, 800, and I'm going to credit my services rendered. Why am I crediting services rendered? Because my equity is increasing. I'm going to be worth more, 800 Rand more. So let's put it in here. So I said here, I told you it was debit bank. So we do as our summary said. You don't go put it anywhere else. If I see debit bank there, you put it on the debit side of the bank account. You don't go put it on the credit side. Then you're going to start getting confused. Okay? So the 800 Rand I put there, and my services rendered, I put under services rendered. Remember the golden nick, Ziza nick? We switch the 2 accounts around, and I go services, and I go services rendered, and here I go bank. So if you look at my bank account now, I can see that all the money that I paid out and all the money that I'm getting in. Okay, then the last one, okay, I'm going to put a date there, the 27th of January. Okay, my last one is paid the water and electricity account for 2,500 Rand. Okay, so if I paid the water, remember paid means I'm out of my bank account, money is going out of my bank account. And why I said we start with the easiest leg of the transaction will always be the bank part of the transaction. So that because they paid, I'm going to immediately say credit my bank with 2,500 Rand. Okay, and I'm going to debit my water and electricity account. Why do I actually debit my water and electricity account? Because it reduces my equity. If you've noticed in all these, right, we've got a double transaction in terms of 1 debit or 1 credit. We cannot have 2 debits, we cannot have 2 credits. Now, I want you not to get confused with that table that I gave you. If you look at that table, there can be 2 minuses, there can be 2 pluses, there can be, the pluses and the minuses have no effect on the transaction, so don't think that you can't have 2 minuses. You can have 2 minuses, 2 pluses, a plus and a minus, but as long as you have a debit and a credit. So don't make that mistake. Okay. So now we can close our accounts off, and this is what I want to show you, how to close the accounts off. Okay, so let's close our accounts off. Okay, let's look at our bank account. You're going to basically add them up. So you're going to say 2,400 Rand plus 500 Rand plus 200 Rand. There's something, the 2,500 I didn't put in here. Oh, I didn't enter that one yet. Okay, so the 2,500 and the reference would be water and electricity. Okay, and the other account would be water. Okay, and I'm going to debit my 2,500 and it's going to be back. And the date there was the 31st of January. Righty. And let's put my date in here, 31 January. Okay, so students often struggle with how to close off accounts. Okay, just insert here. Okay, so students struggle with that. So basically, you add up both columns. Okay, you add up. Let me just want to get my calculator. So I want to add up an Excel now. Okay, so you're going to take the 20,000 plus the 1,000 plus the 1,500 plus the 800. Then you get a number, an amount of 23,300. Right? So you make a kind of like a mental note here on the side of your page. Right? This is now written in pencil. Okay? Then you add up your credit side of your column. So if I take 2,400 and I add my 500 and I add my 200 and I add my 2,500, I get 5,600. So you write that in pencil type of thing on the side of your page. So now I say 23,300 is higher than 5,600. So I'm going to enter the highest amount. Okay, and so can you see I'm entering now the highest amount in, but now I'm going to say 23,300. You type it in on your calculator and you minus 5,600. Then I'm going to get a number, an amount of 17,700. Let's just bold it. Okay. So now I've got an amount of 17,700. So if you notice the 24 plus the 500 plus the 200 plus the 25 plus the 17,700 is giving me 23,300. Now that 17,700 is my carried down value. Right? At the beginning of the month, I'm going to say brought down. So here would be something like the 1st of Feb, right? Okay, and then I take that 17,700 down again. So can you see, this is how you're going to close off your ledger. So this is basically the ledger. Here would be another column in here where it says maybe some your CRJ, but we haven't done that yet, so it will be pointless now trying to confuse you. So now I close off one account. If, for instance, your capital, okay, there's only one entry, you don't need to close off that account. So let's look at services rendered, okay. So once again, we punch in on our calculator the 1,000 rand plus the 1,500 plus the 800. So that equals 3,300. Okay, and it's naught on this side, so obviously 3,300 is higher than naught. So you can enter 3,300 in there, and because we need to have a carry down value, right? 3,300 minus naught in essence is 3,300. I'm going to have a carry down value on my debit side, and here, right, they bring it down to the next month, and that would be the 1st of February. Okay. There's a golden rule, and this golden rule says, let me just write it here, and this is something that you must sort of always remember. Assets and expenses will always be on the debit side. I'm going to show you now. And liabilities, income, and capital must always close off on the credit side, except for bank, really, because bank you could is an asset and you could have sometimes no money in the account. So if you look at this golden rule here, let's just enlarge that. So just look at this golden rule. Assets and expenses must always be on the debit side. Bank is an asset, it's on the debit side. Capital is on the credit side. Okay? Services rendered. What is services rendered? It is income. It should always close off on the credit side. Can you see? Our theories are proving correct. Okay. Equipment, same story. You're going to close it off. Let me just close it off. Okay. So 2,400. 2,400 is higher than naught. So 2,400 minus naught in effect is 2,400. So you're going to carry down, down on 2,400, and let's just draw it down here, 2,400. For the people who came late in, please don't forget to put your student numbers in. Okay. Wages, same story. You don't really have to close it off. Alternatively, you can leave those accounts just. So now I can see that I have a positive balance of 17,700 in my. Okay, so I'm gonna upload this document. I was hoping to do 4 examples. Okay, let's start with another one, learning 2.2. Let's look at page 19. I won't have enough time to do all the transactions, so basically I will choose out of the list of transaction, I will just choose 1 or 2 from the list. Okay, so let's look at learning activity 2.2. People, it's very important to practice. People, it is very important to consistently practice and see where you went wrong, because if you're getting it wrong, you obviously don't understand the theory, and you obviously need to ask why you are getting it wrong. And by practicing is the only way you're going to start to get the nick of accounting. I will tell you that accounting is not easy, it is not nice if you don't understand it. But once you start to understand it, it's the best thing ever. Okay, so let's look at learning activity 2. And look at day 9. Day 9 says, obtain a loan from ABC Bank. Okay? So, the transaction for day 9, because you obtained a loan, that money must enter your bank account. The bank can't just leave it on the side of the road and you go pick it up. Okay? Therefore, we're going to have to put that money through our account, and we're going to debit my bank account. I'm also going to raise my liability now, because now I have a loan of 4,100 that I need to account for. So I'm going to credit my liability, but remember, we're big people and we're clever. We're not going to talk about liability. We're going to talk about ABC Bank. Okay? ABC Bank / your loan account. Okay? 4,100. Sorry, it's getting dark now here, so I'm kind of like trying to find the keys. Okay, so then again, once again, like I taught you earlier, you got your bank account and you got your loan account. So I said debit, we were in agreement with that. I said we start to write from the right to left. For put my 4,100 on my right side. And I'm going to open a liability now called ABC Bank / loan, okay? And I'm going to credit my liability. Reason being is because my liabilities are increasing. I have now more headaches on my back now. There's more debt. And the money also increased my bank account. And remember, I said we're going to cross-reference. So when I cross-reference, I'll put here A, B, C. Now what are my colors one? Okay. Let's put bank. And let's put here my bank account, okay? Let's put my date in. My date was the 9th of February. So I've got the 9th of February, and then I put the 9th of February there. So that's how you do the entry. Received 900 Rand cash for services rendered. Obviously, if I received money, I'm going to increase my bank account with 900 Rand, right? And services rendered, I'm going to open um, 900. Okay, I'm going to cross-reference it. Can you see it's kind of like overwhelming if you don't have anything to look at and how to cross-reference it? So that's why I say it's much easier if you're going to write it out. Okay, and here I'm going to put bank. And then I'm going to put my date here, which is the 28th of February, and here's the 28th. Okay, and then you close them off, like I taught you, and that's that. I think this kind of brings us to the end of the lesson. It's already 22 minutes past 6. I think that this is something that you need to practice. If you can practice feedback at learning activities 2.1, 2.2, 2.3, 2.4, but I want you not to practice them on Excel, because in the exam you're not going to be writing on Excel. It would be fantastic if you could write an exam on Excel, because then you could just add it up so quick and there'll be no errors. But I need you to practice them on paper, pen to paper, because that's how you're going to write the exam, and that's how you train your brain to do the exercises. I also need you to watch your time when you do these exercises. Accounting, there's an element of speed incorporated in accounting. There's no point in you being able to do something 100% and exercise 100%, but it takes you 2 hours to do it, and you will lose all your other questions in the exam. So I need you to practice it with a clock, with a watch, stopwatch, and I need to record your time. And if you did it in 10 minutes, maybe in a month's time you should be able to do it in 2 minutes. I need you to see how much you got correct, like 80% of it you should be getting right. If you're not getting 80%, remember there's the panic element as well in the exam. So you need to be getting these things right at 80%, because in the exam it's a different scenario. So if you can do 2.3, 2.4, 2.5, and work through that. If you have any concerns, you can use the chat group, not the chat group. You can use the chat message on Teams to communicate with me. I thank you for the class and I hope it was helpful, useful. Is there anybody that wants to say something?
Yes, thank you very much. I'm just trying to find where I need to write in order for you to be able to send me some information.
Okay.